And look, if you're a Bitcoin maximalist, Bitcoin doesn't care. You don't care. None of this matters to you, except for one point. The one point is there's $500 trillion worth of money locked up in the traditional financial system. And to the extent that this gets normalized and you can start to funnel money into 401ks at Fidelity, and if Goldman Sachs and JP Morgan start to handle this, hundreds of billions and then trillions of dollars are going to flow into Bitcoin, and Bitcoin's price is going to go from $16,000 a coin to $160,000 a coin to $1.6 million a coin to $10 million a coin.
Hey guys, welcome back to Library of Wealth. Today we have Bitcoin bull Michael Saylor giving us his take on the ever-growing concern in the crypto market and why investor sentiment has shifted. In a recent Twitter Spaces interview, Saylor discusses Bitcoin's path through the next bull run and when we'll see the price reach over $1 million per coin. Saylor became interested in Bitcoin and the crypto market back in March of 2020 and saw a digital reconstruction of assets, power, and currency. This was a major eye-opener because he could see the standard treasury plan had been damaged. Saylor believes we've actually been in a recession since 2020, and the economy has lost 40% of its purchasing power just in the last 2 years alone. While many investors are hesitant to purchase cryptocurrency in such a volatile market, there's no denying the massive gains that Bitcoin has achieved in such a short time. Let's get right into the latest interview with Michael Saylor as he discusses the outlook for Bitcoin in 2023. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
There's three paths forward for the industry. One path is status quo. We continue to twist in the wind while the SEC and CFTC pursue very slow enforcement actions against crypto scammers. And the problem with those actions is if you sue someone civilly and they're counterfeiting money, then they could just keep counterfeiting money to defend, and it takes 4 years before you get a result, right? That's one path. That has been the status quo for the past 2 years. And that's not a good path because the same crypto scammers that are using counterfeit money to defend in civil court are using counterfeit money to lobby in DC and try to corrupt the politicians and the political process and the laws. That was where we were before FTX's meltdown. I don't think we're going to stay in that status quo situation because I think people realize there's a lot of egg on their face, and they can't afford to take another 2 to 4 years or 8 years to clean up the industry. So that means we've been kicked out of the status quo to either the left path or the right path. The left path is very regressive. We're going to, I'm going to issue a memo, everything with an ICO, everything with a pre-mine, everything with a controlling foundation, everything that looks like a security, it all has to be shut down. And then that's carnage. 99.9% of the industry dies. That's like the asteroid smacking into the Earth 80 million years ago, and that'll just wipe out everything other than Bitcoin, right? Right. And by the way, that model is like institutional grade investors buy Bitcoin with cash from traditional banks. That's via registered traders. That's how MicroStrategy spent $4 billion to buy Bitcoin. We did it that way. That is the regressive path forward. And the progressive path forward, and this is an opportunity, Archie, and there's one person in the industry that has the ability to do this, and that would be the chair of the SEC, the single pivotal most powerful person in the crypto industry right now. The chair of the SEC has the power to say, I'm going to give you a registration path for digital commodities. I'm going to give you a registration path for digital currencies. I'm going to give you a registration path for digital securities, and I'm going to give you a registration path for digital tokens. I'm going to define this is what they are. You've got, this is how you apply. If you're going to be, and I'm going to allow digital exchanges to operate trading these digital assets. If that happens, there is a path for 100,000 different digital assets over a decade from now, not now, but you would have 100 assets, then 1,000 assets, then 10,000 assets, then 100,000 digital assets. They would be trading on 24/7, 365 digital exchanges that kind of look like Binance or look like Coinbase, but especially they look like Binance. I mean, Binance is kind of like doing everything everywhere in the world. And so the exchange would look like that, but they would have to be regulated, and they'd have to be transparent. And those exchanges would have to, in essence, come public in the United States, disclose all their assets, all their liabilities, all their conflicts of interest. And then they'd probably have to divest themselves of their conflict of interest. Like you can't trade against your customers.
According to Saylor, the industry has not fully recovered despite the worst being behind us. The recent deleveraging has caused investors to approach asset purchases with greater caution. Despite major stocks experiencing significant drops, Bitcoin's value remains up 77%. In contrast, MicroStrategy stock has risen 132% since the company started acquiring cryptocurrencies in August of 2020, outpacing various other equities and assets, including Bitcoin itself.
We can already see big organizations, BNY Mellon, Bank of America, Fidelity, they're already moving into Bitcoin trading and Bitcoin custody. And so that's happening regardless. If we come back to my three scenarios, the status quo twisting in the wind, or the regressive or the progressive scenario, in all three of those scenarios, Bitcoin is going to be traded and custodied with regulated entities, with banks, regulated financial players. You're going to get your Bitcoin through Block, you'll get it through a Coinbase that's a publicly traded, regulated company. You'll get it through a NYDIG. You'll get it through a Fidelity. You'll get it through a whatever bank. That's happening regardless. If you get the regressive stance, you will have a small digital assets set of exchanges or crypto exchanges that trade that'll have very narrow focus. They'll all be regulated and registered, and they'll coexist with all the self-custody solutions for Bitcoin. And you'll see a few of the strongest players cross the chasm. Like a Coinbase crosses the chasm when they delist and they don't list their own token and they come public and they start to, file registration statements. A Circle is crossing the chasm. And the way it matters to you is that hundreds of billions and then trillions of dollars are going to flow into Bitcoin, and Bitcoin's price is going to go from $16,000 a coin to $160,000 a coin to $1.6 million a coin to $10 million a coin.
Saylor suggests investing in scarce, profitable assets that are free from counterparty risk. He notes that the global demand for stable digital currency is growing as countries are facing currency instability. He believes that Bitcoin will thrive as a valuable asset because it's validated and supports an entire class of assets. According to Saylor, while strong nation-states may still have fiat currencies, the currencies of most countries will eventually fail. He advises against holding cash that rapidly loses 20% of its value per year, and believes that maintaining generational wealth requires purchasing desirable assets with low-cost money and holding onto them forever. What do you guys think of Michael Saylor's outlook for Bitcoin in 2023? And what will the price be by the end of the year? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.